All right, hey guys, Sam here with you. What are we? Tuesday, mid-morning, January 23rd. And kind of a cool thing we're doing now, putting out a vote for the members to be able to pick the videos for the day. And we have two winners today. First being Ripple to the dollar here on Bitstamp. So we're going to take a look at this here. Now this is... I mean, so this giant move here, you know, it's very hard to look at this. So we're going to open this up. I just wanted to give you some perspective of where we're coming from. So this is what, 20 cents here, and here's the 1-2, and I'm going to make the case here that I think we may just be in the one wave of our third wave here, right? So here's where the 1 and the 2 have been defined. Now we've had this giant move here. You get there's certainly an argument that this could be the 3, but I think if we go to log scale, you'll see that there's a reasonable argument that this is just the one wave. And based on some of the technical findings here, I think there's some good evidence to support that, which is, of course, wildly bullish for Ripple on the longer term. So when you see this kind of move here like this, this is where log scale can be really helpful. So when I put it on log scale, you can see that here, so all I've done is just wick off the absolute lowest low here. All right, so we can see that 5-wave subdivision here to give us a 1-2, and then now, so remember, it compresses the higher you go up the chart, you get this compression here. So we get more clarity as we come through here. So I'm going to open this up here, but I propose to you here that, particularly now that you look at it in log scale, that all we've done here after we had this nice 1-2 is go up and put in a 1-2 of what potentially could be a third. So if we open this up, now I'm on the 4-hour here, so let me open this up a little bit and we'll take a closer look at this. See if we can make that case. So, you know, this clearly, you know, is a pretty dramatic retracement. Now, if we look here, we have all the subdivisions. So we do the same thing we would do with any count. So this is, I've wicked off the wave 1 high over here, right? So we're conscious of staying impulsive. But we also have a wave 1 here, and we're far from these, right? So just if this is our 2 and this you know, whatever this ends up being, right? We'll only know ultimately with the benefit of seeing it unfold. But right now, given that if that's a 2 and we have this nice subdivision here to give us a 5-wave structure to complete up here, given the depth of the retracement, that's certainly much more characteristic of a second wave than of a fourth wave. So, you know, if you're making the argument that this was the third and this is the fourth, and then we're going up, you know, coming to this level here, so far beyond the 65, we're in a very low statistical probability there. So it's approximately 10% of wave 4s would retrace more than the 62%. Or the 618 to the 65 window, as I like to call it, the golden zone. So very low percentage here, but very typical for a wave 2 to retrace down and challenge the 786. So that just adds to the thinking that we've just put in a wave 1 here. Let me tighten that up for our third wave. So if we now, let me open that up. So I'm going to go down to the hourly and take a look and see what we can find here. So if I open this up. Okay, so you can see here now a couple of things. Let me gotta get it so you can see it. Okay, so now we get a better look at it. So with this as a completed 5-wave structure, so we see very nice detail here. We had the 1, the 2. We have to accommodate this big spike down here, but I think we have an A, a B, and a C. So give us a 2, then 3, 4. So we get a clean 5-wave structure up here to complete, you know, whatever this ends up being. But I propose to you that's the completion of the 1 wave. Then we start this big move down here. So if I take it out of log scale, you can see this is, you know, this is kind of something you have to deal with. If you in and out of log scale, you kind of, if you start using it, you kind of want to check back and forth to see where you are. So if I'm out of log scale and I draw my pitchfork now, so I'm just using my first pivot and retracement. So I get an A wave, potentially this is a B, and then we get more complexity and a deeper correction. So, I mean, it's very possible that what we actually have here is a WXY. So, because of the size of it, so WXY completing down here, which bring this down 2. So, and a WXY is not complicated. It's just connecting two ABCs. So you can see we get an A, B, and then down for a C. So that would be ABC into a completion. That would be, so if I'm actually going to do this properly, as I probably should have set this up earlier. But that would be our W wave. The X wave, always corrective, right? That's corrective. We get an ABC. So the trend here now is down. So the ABC here for an X wave is corrective. And then we go down here and we finish here. Now, I want to bring this up just to show you how the median lines have supported this. So here's our corner pocket trade, right? Remember, it's good up or down. It's the same idea. So with this as a retracement, and we can check that. So from that A wave there, we go in between the 50, come a little shy of the 618. Here's the first algo target. You can see the reaction. But you've got here 80% probability of making the median line, right? If those pivots hold, then we breach it here. We come right down to the algo target and then look at the reaction. So that's clear evidence that you have algo participation along the way. But then we continue to move down. Excuse me, and you can see this median line continues to offer support, and finally, all the way down here, we hit it to the tick. So right to it, where we get into this double bottom here, where we've even gone past the negative 100. Here's our 786. So we're in this window here where you're kind of you might be looking at this. So if you didn't have the median line on that, you might be holding down here. You've got some structural prior resistance here. Look how that ticks it just perfectly. So prior resistance offering the support. Not uncommon for a market to retrace back to the prior 3-4 here after completing the fifth. It's common, but this is extreme. Then you might check a few other fibs here looking for a relationship. So if we pull from the W and then look at the X wave here, well, here's the here's the 618, here's the 100. So we're kind of in between, but I would continue to look. I would continue to be checking. So if I look at the B to the C, there's the 50, there's the first algo target. So we get kind of a big cluster down here, where you have, it's not spot on. We're not hitting them to the tick, but we're getting a fairly big range here. What we do hit to the tick is the median line. And that's where we get the big reaction. That in conjunction with the prior resistance here offering support. So we get this big confluence zone down here. And from an Elliott perspective, this place. So let me take some of this off so I know the chart gets very cluttered. So now if we go to log scale, now let's look at that. Now, as relates to the median line, you can see it's still affecting, but we're now, so I've got 100, 200, so I'd have to add the 300 on the median lines to cover that. So if I go to the 3, see now we get, I might even go 3.5 there. So median line 100, 200, 3, 3.5 gets it right to the edge. So you get this confluence zone down here. And the median line still seems to be a factor. So if we allow for this, so the assumption being now that the low is in, right? We've had a complex, very deep correction. And now if the assumption is that pivot is in, well, now what are we expecting? Well, we're looking for a 5-wave structure to support the idea that if that's a 2, we're just getting started in our 1. So this may well be our 1-2 of our third. So from an LA perspective, we'd pull here, say, okay, well that plays. I can see 5 waves in there. There's a nice 2 right to the median line. So we'd be looking for something like that. Right, here's the next algo target. So I'm going to pull some of this off just to declutter. So if I look here now and I work from this low up to my 1, what do I get here? Well, again, it hasn't been to the tick, but you're certainly, remember, it's interesting. So you'll often see this. So we went beyond, we didn't quite make the 786 on this pull from the 1 to the 2, and then here we go beyond the 65, knowing that a 2 can go as deep as the 786. We get a few ticks through it, but we tag the median line yet again here. So that certainly plays as a potential 1-2. And I would propose to you this is likely the 1 wave going in. So if I put the wave on that, you get the idea here. So potentially what we have here is the 1 wave going in of the larger degree. So if this is our 1, all right, and our 3 is going to be way up here. I would not anticipate we're going to go straight there, although anything's possible. More than likely, what we'd start doing is looking for those probability zones. So we take the 1 projected from the 2. Where's our high probability zone? Right here. So if I pull this back now, so that potentially plays, given a little more symmetry, perhaps we see something along those lines. So here would be a reasonable target, and often you'll see this where the negative 100 will line up with the 1618 on the projection from the 1-2 alternate price projection relative to just the straight fib pull. At first algo target, second algo target, third algo target, and fourth up here. So that potentially, offers us this pivot here as a 1-2. So to the largest degree, I'm proposing that we have a 1-2 followed by a 1-2. Well, if that's the case and we're working from that median line, then we would add another median line. So we'd work here to the 1, then down to the 2. Now I've got that modified, so let's go to the original. I'm going to take some of these extremes off. We'll go to original, see what that looks like. So this, kind of interesting here, this as to when and where we hit this, right? So this is where median lines offer you a time component, where you can kind of look for that structure to play. Now we can't be absolute about where this is. We may end up needing to go to a modifier here. So if I go to modified shift, that's essentially identical to a channel. So you can see this. So if I were to put a channel on this, I'd work here. So I'd work like this to the 1 high. You see how it's identical to a channel? So that's why I like a pitchfork, because I can get a channel, I can get the original median line, and I can apply all of Andrew's median line trading principles I don't always need the channel. So if I put that, so that would give me interesting. So here the assumption would be we're going to work through the touch of the median line here, get to the algo target, and work to the upper parallel. For our third, that would look better structurally with regards to the high probability zone for our third. So that looks like a very reasonable roadmap to get us out of this hole. Now, of course, the assumption is that we've put in the low, and this reaction we're getting here would support that. So on this now, I'll take this off. Since we're working on the assumption that the low is in. And now here, so there's certainly a trade here. So even here now, you can see we get some subdivision here. So potentially, if I blow this up, we've got yet another 1-2, or just the start of it. So if I look here, so I'm going to tighten these up. You have to do this when you change time frames. Blow in and out. So if I get right on it there, so let's do the same here, get right on it. Okay, so very, very reasonable to think that we might have a 1-2, and we're going in for the 3, 4, 5 of the 1. Let me take the wave off of that. You don't need that. So that's reasonable. So this is how we confirm it, right? Does it make sense? Do we get 5 waves out of this low? Because we're operating on the assumption that this is the hard low. That's in. And so if you were trading this, so here's a textbook. This is just the kind of trade that I like. So here, if this is our pivot low, right? So often I'll tell you that a way to approach this, if you're not sure when the market's just been falling like this, if you want to be a little bit more conservative in your approach, rather than try and catch the absolute pivot low, the more conservative way is to wait for that reaction, then take the next retracement. So because now you can look at this. So look what you can do here. So you could be a buyer here at the 618, right? We got an algo target. We can work on the assumption that if that pivot is in, I can get 9 to 1 there. And I'm risking such a small amount to try and just get into this, because if I start to back this all out in terms of where I'm going, look at that potential risk. Now, that's just assuming this would be the 1 wave of the third wave. If I put it all the way up to the third relative to what I'm trying to get here in this 1-2, now what have I got? Now I've got 16.4 to 1. Do you see why I like that? Because I can be so tight on the stop, because I am entering the market on the assumption that I have a good pivot here. And there's no reason for me to do that or that, because then you're rationalizing. Say, oh, okay, well maybe the low's not in. No, that's not the way to do it. work on the assumption, if you're, as a technician, if your assumption is that that's a pivot and it's certainly technically viable, take the small loser rather than rationalize and start lowering your stop. I'd much rather take the small loser and then look to re-enter. Reevaluate well, if it's coming back down, do I have more correction underway? Because if I don't get a third here, I got to reconsider the count. I got to reconsider this pivot as a 2. If I get a little ABC and then I'm heading down again, which certainly is possible, if I get a little ABC and then I'm going deeper, well, I got to rethink my whole count. So I'd much rather take the small loser. Yeah, I mean, it's always worth it to me to look at that and say, if I can get 15, 16, 14 to 1, I'll take that all day long. And if I get stopped out, so be it. I mean, it happens all the time. That's part of trading. Now I'm going to reevaluate and say, well, what did happen? What could be happening? If that's not a 1-2 of this larger degree here, so let me put that. So of that, you go to white so you can see it. If I'm wrong there, if that's a good pivot and that's a 1-2 and I don't get a 3, 4, 5, well, I got to reevaluate the whole thing. So maybe my entire premise is wrong. I'm willing to take that loser there to make that bet. And if I'm wrong, I'll reevaluate and look and see if it sets up next time. See, is there something better? Maybe it's. I mean, we just don't know. There's so many different things that could happen there. But I like that 14 to 1. I mean, that's a no-brainer to me. Why wouldn't you take that? Is maybe the better question. So what if you're not comfortable with that? What trade has to set up that you will take? Right? Ask yourself that. So that's a no-brainer for me. But now that we look at this, so it has to confirm. So if I go back in on this, I need to confirm this 3 just like I need to confirm this 3. All right, so again, waves within waves. So can I confirm a third there? Can I get a third? If that's a 1, if that's my pivot, then that's reasonable as my 2. So what am I looking here for my third? Well, at least I want to get 100% of it. Well, so we've gone 100%. Well, here's the high probability zone. So if this is just going to be a little baby 1, maybe I'm looking at that. So there's the 1618 relative to the length of the 1. So if I put that in and put the wave on that, I mean, so do you see what I'm trying to do here? So maybe that's just so here's my third. This very well could be just the 1 wave of my third wave. Right? So now I get a roadmap. So I get a roadmap within the roadmap. Do you see that? Because here's my larger roadmap. Here's the one I'm really trading is this one. Right? But I can get a little, can I confirm that I'm on my way there? By getting a 1 wave. Okay, well, if I'm in here and I get up to it would be perfect right to the median line. If I get a 3, 4, 5, well, I know I'm going to get a retracement because I'm expecting the 2. So that's where you got to make the decision. If you tap here at the median line, we get a reaction. Are you taking a little profit there? What'd you get if we got right to the median line? Well, you got 5.5 to 1. Right, I mean, is that enough? So maybe you take a partial there because you're anticipating the 2. You need the 2. You need the 2 to get to the 3. Right? So this is the profit taking. So the people that caught this might take some profit here. So they start selling, taking profit, or stops are getting hit that give it a little push lower. Then you're doing the same thing. Do you see? So the whole thing repeats. So if that's a 1-2. Well, then just like you did this 1-2, well, if that's my 1-2, I can set the same trade up. Okay, if that's my 2 and that's my 3, then I'm operating on the assumption that I'm not going to violate that 2 low. That would be extreme. But I could violate the 1 high, right? Because I could get a diagonal here in the 1. But I'm certainly not going to violate the 2 because then the count is invalidated. So I can get into that, and there's 5.5 to 1. Again, assuming that my target up here is the 1618. So just as I did this one was even better because the stop is lower. Now I'm trading in, now I've got a bigger 1. So the distance to invalidate it is bigger. You see that? Because the 1 here, if I get a 1 there, the depth of the 2 is going to push that down. So are you willing to take, let me blow in here. So are you willing to take 50%? So just hypothetically, if this is our low and we get our 1 up here, well, here's the 50. So a 2 is likely, statistically speaking, going to go at least to the 50. There's the 50. Here's the 618. So somewhere in here, you're looking for the 2 of the next degree, right there. So are you willing to give that back? Maybe, again, as I would often tell you, a partial here, nothing wrong with that. Take a partial profit, know the 2's coming. Now you're going to give back at least half of your profit. Right? That's why people that's what creates a 2, because people don't say, I don't want to give back half my profit, so they start selling, taking profit. That's what creates it's the whole Elliott wave structure right there being created emotionally. Ooh, greed, fear. Greed, fear. Profit, realized. Wait. Greed, profit, profit. I'm going to take some profit. You know the 4 is coming. Need the 4 to get to the 5. Right? So that, I mean, again, you know, whether or not you subscribe to Elliott wave or not, again, you could just be trading the retracements, right? Retracements are inevitable. They always come. Always. You show me the chart without a retracement. I'd like to see it. You won't. There's no such chart. There's always a retracement. For whatever reason, you pick your reason. But I promise you a big part of it is people that have gains are taking profit. People that shorted it, because there's got to be someone on the other side of that, people that shorted it, right, that shorted here looking for a new low because they're bearish, right, their stops are getting hit. Those are buy orders. That drives the 3. Then the greed kicks in. Then oh, I don't want to give my profit back. Then the retracement kicks in. Then, you know, it's the same thing over and over and over again, guys. Same thing, right? So that's the benefit of Elliott wave theory and applying it to your trading. It gives you structure to work with it, so you can get your mind around it. It's not always right. Nothing's always right. You're going to get stopped out all the time, but you have structure to what you're trying to do, so that because otherwise it's just random chaos. I mean, that's the conclusion you might come to. Well, how do I know which pivot is? Well, there is a way to know, or at least a way to play with the probabilities on your side, and that's all you get as a trader. All right, so that looks pretty interesting to me. I sure would like to see it tag this. So what do? So you alarm the 618, so you don't have to stare at this thing all day. And I would alarm the pivot down here. So if one of those is violated, I got to rethink what's going on here. So I sure want to know if I get up to the 1618, because that's going to give me more confidence that I've got a 1, 2, 3. Now, okay, so if you didn't trade the 2 and you get a 3, well, the retracement for the 4 likely coming. So the problem with the 4, always relative to the 2, is that you've got less distance, typically less distance to travel in the 5. Right? So the risk reward is not going to be as good as taking the 2 into the 3. Right? But so if you caught this, so that's a little single. So remember, it's waves within waves, as I just shown you. So that would be the 1. So you get the 4, the 5 of the 1 of the 3. I know it sounds silly to say it out loud, but that's what it is. So try and describe that to someone who's not looking at it. They're like, what the hell is wrong with you? 4 the 5 of the 1. Well, then you're waiting for the 2. Right? Then if that's the 1, I wait for the 2 to catch the 3 of the 3. See it? Same thing. Pattern just repeats over and over again. It's kind of cool, actually. All right, guys, I'll wrap it there on that one.